Good morning, bosses. How are you doing? As you can see, it's already nighttime and I spent the whole day having meetings on the computer with people in Brazil, and I wasn't going to do any video because there's nothing to do, there's nothing to show. But one of my resolutions this year is to actually do a daily vlog, which I'm trying to do it since 2016 or 17. So I decided that instead of doing a vlog, I'm going to tell you what I was talking to those people. And the question that I was answering, because I was talking to people that wanted to invest here, is where to invest $1 million. See, there are many ways that you can invest $1 million. You can put the money in the bank, you can buy a property to have rent, like just a simple property or several small properties. You can buy a triple net lease that is going to give you a steady cash flow but not a lot of return, even though you're going to have a very nice tenant with low risk. But these kind of people that I was talking to, they are Brazilians, they are wealthy investors, and they want to mix a little bit of both, a little bit of cash flow and a little bit of risk to have more return in the future. And that's why I was showing them this kind of property here that is a redevelopment opportunity for a multifamily in Alapata here in Miami. Jevaux Development is my development company, the same company that I use to build the houses in La Belle, the same company that I use to develop new real estate projects. So when someone wants to invest in real estate that is not just buying a property, which that is Jevaux Luxury, Jevaux Development is the one that deals with this kind of opportunity. In this particular property, the idea is to buy this multifamily, renovate, and increase the rent and sell. And why is that a good deal? Multifamilies are a kind of property that their market value is based on what they can produce of income. And let me explain you what that means. If a property generates $100,000 in net revenue every single year, and what the market is looking for is a 10% cap rate. That's what the market is trading. Every property that generates 10% in cap rate. Cap rate is how much money you make based on how much money you are investing. So $100,000 is 10% of $1 million. Therefore, if that property generates $50,000 per year, 50,000 is 10% of $500,000. So that's why I say the multifamily property market value is based on that. If the average or if the standard of the market is to trade properties at a 10% cap rate, the market value is going to be based on how much money they generate every single year. So this allows the investor to find properties where they can buy, increase the rent or reduce the expenses, and therefore you're going to also elevate or increase the market value. And that's what we are trying to do with this property in Alapata. Let me show you. This property is for sale for right now $2.2 million, and it generates $127,000 per year, giving a 5.6% cap rate. And when I said 10% was just to make the numbers easier for me to explain. But if the video name is how to invest $1 million, why I'm showing a property that is worth $2.2 million? Well, because of course we are going to use leverage. We are going to use finance to buy this property, and take a look on that. In my projections, we are going to use 60% finance, meaning that we need to put down $900,000 without the closing cost. The investor needs to put around $983,000 to purchase this property. With that, our goal is to do some renovations in the apartment units, about $25,000 per door. There are 10 doors there, there are 10 properties. And with that, we expect to increase the rent quite substantially. Currently, the 2 bedrooms are being rented for $1,600 and the 1 bedroom is for $1,200. And the market right now is is trading at the 2 bedrooms between 24 and 2,800 and the 1 bedroom between 19 and $2,000. By doing that, we are going to increase the annual revenue from $15,000 to around $23,000. And because the costs don't increase in the same proportion, actually they stay basically the same, which is maintenance, property tax, insurance, and just a little bit of other things like utilities, we are actually putting that money extra in our pocket, or the investor is putting this money in his pocket. So the new financials of this property would be more or less like this. $2.2 million for the purchase price. The new income now is $260,000 with $54,000 expenses. The net operating income is $221,000. And that's what we look for. That $200,000 is the new NOI compared to what was previously. And before we had a 5.6 cap rate on this property. And if we sell this property at a 5% cap rate, the new market value would be $4.4 million, while it's still generating, after paying the mortgage, another $100,000 for the investor. That's why I really like multifamily properties, because you can get cash flow, you can get appreciation, and you're going to use all the money that you put to renovate this property, to write off your taxes, and at the end the investor can either sell and cash in the money, or he can get a new finance based on the new market value, take their money and do other investments. So that's what I spend my day doing, talking to people about this kind of projects. So that's why I don't have a lot of things to show today other than this. So I'm going to end my vlog here, and I'll see you tomorrow. Bye.